This podcast is for informational purposes only and should not be a substitute for mental health services.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Financial Wellness are not affiliated.
Welcome to Financial Wellness. I'm Stephanie, along with my childhood friend Chad. This is the place where we unravel the intricate connections between financial well-being and mental health. In each episode, we explore the complexities of personal finance and how our monetary choices impact our emotional and mental states.
Here is where we also discuss and learn how to get better at everything from budgeting to investments to insurance. We share personal stories, expert insights, and practical tips to help you navigate those connections between your financial stability and mental wellness. Make sure to show some love by liking and following us. It really helps a lot. So let's get started. Did you want to go first?
Our mental well-being is directly linked with our financial well-being. We can bring some normalizing and even some humor to these situations. You know, we're both from New Orleans. We like to bring a little fun to the table.
Yeah. It becomes empowering and it becomes something that you control versus something that controls you.
Hey, Chad.
Hey.
How are you?
I am good. I'm doing well. How about you?
I'm okay.
Yeah.
I am making it.
Same here. Same here. Tried to have a nice relaxing weekend and rolling right into the coming week. We are ready to go.
We are ready to go. I've been thinking about all of the stuff that we've been talking about over these episodes. And, you know, a lot of it is so deeply linked to the lives that we are currently leading.
Yes.
Really, the origin of what we've been talking about is very much from those pillars that you talked about of financial planning. And I
Hmm.
usually chit chat, but I've like been wanting to get into this topic.
All right, then
Jumping right in.
well let's just jump right in. So if we wanted to kind of recap, we talked about those three pillars, which, start with your foundation. So the foundation has those two elements that really focus on how we manage risk, right? The first part of that being the budgeting element, planning for today, making sure that we have enough money set aside for those minor risks. Like, I've given the example of like your tire getting a flat, or you're having to replace something in your home, or something along those lines. So just sort of minor risks that aren't financially devastating. But we also in there too talk about opportunities, right? Having money set aside for potential opportunities. Like if there's something that you did want to purchase, that you could go ahead and purchase without having to liquidate investments or put money on a credit card, or whatever. And then there's the other part of that foundation, which is the managing the more catastrophic risks, managing those things that could potentially wipe you out financially, right? And that's death, disability, long-term care type stay, liability risk. You rear end. I gave the example of, you're rear-ending somebody in your car, and all of a sudden now, you have all these medical costs associated with the person that you injured. So those are kind of our foundational pieces that we really have to make sure that we're prepared for, so that we can then go and plan for the future, retirement and paying for kids to go to college, and setting money aside for travel and vacations, and potentially purchasing a second home or a new home, or just having money set aside to do fun things that we want to do and feeling comfortable enough to be able to do that. And so, but today I know we're going to go back to that sort of major risk area and really hone in on the liabilities piece. And this is one of those pieces that we all kind of think about because we all have to do it to a certain extent. We all have to carry some form of car insurance. So the liability piece that we'll be discussing today will really hone in on those property and casualty type insurances that we have to carry, the homeowners insurance, the car insurance, potentially umbrella insurance, and really wanted to talk too about, kind of the emotional aspects of that type of planning. You know,
Right.
one of the things I find interesting with home or with car insurance is that for the most part, we all have to carry it in some form or fashion. And that's different than other lines of insurance. We're not required to carry it, the other types. So it'll be interesting to see where we land today.
That will be interesting. And I was giving this podcast a lot of thought and how we've been approaching the mental health aspect of dealing with finances and your financial health in general. And it really, a lot of what we've talked about, it really boils down to how we manage our stress. Finances can really help to lower our stress in particular situations where we feel safe and secure and covered. And it can also serve as a real stress inducer. And a lot of our stress management is going to be something that leads us into our healthy habits or can be part of our unhealthy habits. And a lot of what we've talked about in this podcast is our unhealthy habits related to stress management can be things like kind of short-term things where we procrastinate and use avoidance. And we can use those chronically. They could be something of a pattern, but it's a short-term management skill that we're trying to avoid looking at the finances or making financial decisions or checking to see whether or not we have the proper coverage. All of those avoidance strategies, procrastination, things like that can really lead to much bigger problems down the road. And then we also have more long-term avoidance strategies of not wanting to feel our stress. And that's when we start to see things like addictions popping up, things like that, which are specifically really helping people to avoid any kind of decision making, be it financial or otherwise, any kind of uncomfortable feeling. So there's such a wide scope when we look at the ways that people manage and deal with their levels of stress. And so much of that is unconscious, subconscious, so to speak. People are doing things to avoid either looking at their finances or looking at difficult situations or feeling uncomfortable, and they do it without even thinking about it. So when we look at our mental health and healthy habits, there a lot of it is very much connected to our finances and our financial well-being. I mean, you and I have talked about that for years and how we can't really separate the two. But to
Right.
me, much of it boils down to stress tolerance, stress management.
So it sounds like a lot of that is sort of subconscious, right? How do we get from being more proactive in how we handle these things, right? It almost feels like we're sort of driven by these subconscious feelings that I don't want to say not in control of, but they can be kind of controlling if we're not proactively addressing them. Does that make sense?
It does. Well, the first step is to start to become more aware. So I say unconscious because it's just a pattern of behavior that has never been inspected, so to speak.
Hmm.
So we all have our things that we do that we have really no understanding of why or how we do them. We do things maybe like we've seen others do them in our families. We learn them.
It's funny because as you're talking, I'm thinking it sounds like our like we get hardwired to act a certain way without realizing it.
We do. And actually that hardwiring happens in the first 3 years of life a lot of times. And
Really?
so yeah. And so that the response type is what's hardwired, not necessarily like whether you're drinking alcohol, things like that,
Hmm.
obviously. But those innate responses are really born from those first 3 years of life. And then we learn a lot along the way as well. Our environment is a huge aspect of how we develop the strategies that we use to navigate our lives. And many of those protective strategies that we use can also be very unhealthy long term. So, the first step in really understanding what it is that you're doing is to take an inventory of what happens when you feel uncomfortable.
Hmm.
The uncomfortable feeling arises. What is your first instinct? Is it to sit there and really feel it? And a lot of people would say no to that. Is it to find someone to talk to about it? Is it to run to a substance? Is it to, and I hear this all the time, just quote unquote, stop thinking about it?
That sounds
And
hard.
that's what a lot of people think they're doing is to stop thinking about it. I just push it away, but it's still there. So it has to be processed in some way. So people will compartmentalize. They'll go to food, they'll go to gambling, they'll go to substances, they will go to loved ones. Just knowing what your primary response is when you feel uncomfortable is step one to starting to change those processes. And everyone procrastinates, I'm sure, at some level. But what are you procrastinating? What is the feeling that you are trying to avoid having if you do the task that you're procrastinating? So if it's something with like a work project that you feel like is going to take a long time and it's going to be boring, maybe you don't know how to do all of it, then you're wanting to avoid either feeling overwhelmed, you're wanting to avoid feeling that you aren't capable. What are the feelings that you're trying to avoid? And so building an awareness around why we're doing what we're doing is the first step to making the changes that we need to make.
Yeah, I mean, it sounds like kind of what we're talking about, like being a little bit more proactive in how you address your own reactions, right? And not just letting yourself be controlled by what's your customary response. I remember seeing this diagram and it talked about it was a visual of our comfort zone, right?
Right,
And
right.
so it was a circle, right? And inside the circle was your comfort zone, and like these arrows, like pushing at the edges of the circle, and like
Hmm.
how we want to try to do things outside of our comfort zone to make that circle bigger, and we can either stay inside the circle and be comfortable or be uncomfortable and proactively do things to go outside of that circle.
Right,
And then the diagram showed that when we were able to do that, then our comfort circle gets bigger, right?
right,
And so, but it's so hard sometimes to do that, to push beyond that circle and push beyond the comfort zone. I know I struggle with it. There's certain things that I'm completely comfortable doing, and I know how my reactions are, and sometimes I am able to push through and
right.
but a lot of times I just sort of slunk down and just stay within my comfort zone because it's so snuggly. It's like when I wake up in it's like when I wake up in the morning, I just want to wrap up in the blanket and the pillows, and not deviate from that.
Right. Yeah. And it's a comfort zone for a reason
But
because
also
that's,
know it's not doing me any good outside of making me feel
well,
warm and snuggly.
I think that does do you good at times. It's when there are outside forces that are pressuring you to get outside of your comfort zone, and you're resisting them. That's where you start to see the strategies, maybe the unhealthy coping strategies that are at play. And it really just depends on the person and the unique life experience that they have with them, or the unique life experience that they have. But there's a lot to be said for being comfortable.
Well, yes, very true. But when it's when it's limiting growth, I guess is
Correct.
that's where it becomes problematic. But I love what you said about getting an understanding of what your first instinct is when you become uncomfortable
Right.
and
Right.
creating some sort of internal awareness of that. And I never really, never really thought about it from that perspective.
Well,
So,
and something you said, you had talked about reacting and responding. And I would actually say that we react, and react to me is not thinking, but just like like not impulsively necessarily, but just our responses are they're not thought out. And I feel like a response is more thought out,
mhm,
if that makes sense. So we can react, everyone has those trigger points where you just are like, it sends you, things that we call pet peeves or things like that. And then we just react. But if we can take the time to respond, that actually is part of the change process. And we have to be really mindful when we're doing those responses. And that takes a great deal of practice, I would say, to
yeah,
be able to do something like that. And I think a lot of people get really frustrated because they may be able to respond in some situations and react in others, but because they're still being really reactive, they're like, oh, this doesn't work.
mhm,
And just like anything else, you have to practice it and keep doing it until it starts to feel more natural.
mhm,
And I often will, I work with a lot of teenagers, and I'll often talk to them about, oh, all of my progress is down the tubes because what is the word that they use? I popped off or something like that.
yeah.
That's what they say.
Well, I was sorry. I was just gonna say it's like creating muscle memory, right?
Yes.
In sports, the more you practice, the more you do something over and over again, the more your body just gets used to doing it.
Exactly. And that's why you have to practice doing certain things when you're not feeling elevated or escalated. But step one, all you have to do, step one, is just become aware of the feelings that you're trying to avoid
Yeah,
or what your response is when a specific feeling happens.
like
And
those
discomfort,
triggers.
really, yeah, what are your triggers? The discomfort. And it can be as simple as boredom. A lot of people don't like to be bored.
Hmm.
I work with young people, so they hate being
Yeah,
bored for the most part.
I have young people in my life. I get it.
So, what do you do to deal with boredom? And you and I are Gen X, so we are the masters of just
Oh,
entertaining ourselves.
I can be completely bored all by myself and be completely content.
So it's very foreign to us, but it is a real issue for a lot of people. So that would be my addition is a lot of our healthy habits are going to be built around stress management. And the flip side of that is a lot of our unhealthy habits are also our efforts to manage our stress.
Now, where does the idea of doing what's minimally required fit
Yeah.
in, right? Because
Yeah.
in some cases we do have to do things, but we're just going to do the bare minimum that we're comfortable doing, right? Where does that fit in there?
That's the easiest way to go. So
Hmm.
you call up your car insurance people and you say, I need car insurance because I have a car and I'd like to operate it in the state. And the car insurance people say you have to have this, this, and this. And you're like, great, give me that. It's like you don't have to put a whole lot of thought into it. It's just the easiest road that you can take
Right.
to stay in a transportation
Right.
metaphor.
Well, and hopefully when you say, I got a car, so I need to get insurance for it. Hopefully that agent or that broker on the other end of the phone is saying, okay, yes, these are the
Hmm.
minimum amounts that you have to get. But hey, let's have a deeper conversation about your risk. What are you trying to protect? What are your
Right.
assets? What's your exposure? What what what's your real risk level here outside of, I just have to satisfy what my state is telling me I need to do. And hopefully
It's
there's some real
interesting.
conversations there.
I'm trying to think back on times when I've had these conversations with car insurance in particular. I've never once had a car insurance person ask me what my assets were, ever. I mean, they've certainly talked to me about the benefits of having additional coverage, but it often sounded more like a sales pitch than it sounded
Hmm.
like, let's keep you safe and protected.
Yeah.
Now, it was a different situation when I went through the process of getting homeowners insurance because
Hmm.
I knew my insurance broker and we had a more, um, realistic conversation. And obviously, they had to know what some of my assets were because it was a home. But yeah, I've never once had any car insurance. No one at State Farm or Progressive have ever asked me what my
Well,
assets.
but you raise a good point. I mean, that is one of the hardest things
Hmm.
on the insurance agent side
Yeah.
is because we're so accustomed to think that someone is just out here trying to sell us something, that
Hmm.
it's hard to really listen sometimes to what the agent or the broker is saying and trying to either expose you to or educate you about. Going back to those pillars, right? When we start talking about all those different risks that we have every day, if I start talking to someone about their homeowners insurance or their car insurance, or if I'm talking to them about their life insurance or potential long-term care exposure, you have to make sure that you're having that conversation in such a way that it doesn't come off like you're just trying to sell them extra stuff, right? It's in some cases it's making sure that the person you're talking to understands the concepts of risk. It really helps when they've experienced some sort of loss or had some sort of experience on their own,
Right.
so they know where you're coming from. I think I told you the story about my mom and how she had, or I had approached her years ago about long-term care
Oh,
insurance.
yes.
Yeah, and she, at the time wasn't really feeling it. She wasn't feeling that conversation. And then years later, after taking care of my grandmother and going through, under watching my dad and my, really the two of them as a couple going through that massive change where they had to take care of my grandmother and do the all those care things, bathing her and taking her,
Mhm.
to the bathroom and all these different things. And it really became a significant event to the point where she came back and was like, "Hey, can we revisit that conversation around long-term care insurance?" And sometimes the insurance is just there to make sure that A, your risk is limited, but also that you have additional resources to get the professional care or the protection to make sure that you're able to address these potential financial risks with a high level of dignity,
Right.
particularly when as you get older. Now, as it relates to car insurance, I mean, same thing. When we talk to people about getting coverage over and above what the minimum that the state requires, again, it's just a deeper conversation around what your assets are and what your potential risk is, and making sure that you don't have a liability that will cause you to completely run out of money and go bankrupt and have a massive financial crisis. And
Would,
sometimes it's hard for people to see that you're really coming from a place where you're trying to help folks, and as opposed to just trying to sell them something they don't need.
of course, would a teenager be considered a liability on that car
Yes.
insurance? I was curious about that. Well, one of the things that I think about when you're talking is, and I'm really just comparing my own personal experiences. When I call car insurance, I'm just talking to, I don't have a specific agent. Now it's kind of, I used to, like back when I first had car insurance, we had a specific agent that I talked to all the time, but now it's a little bit more like you call the number and talk to whoever. There's no real relationship there. But the person who handled my homeowner's insurance, we went to high school with him, so I trust him. And, like
Hmm.
there was a different kind of relationship where I was able to really go through the specifics, and I trusted that he was going to tell me what I needed to do and I was going to listen to him. So,
I think that same homeowners insurance agent that you're speaking of helped my parents as well.
oh, really?
Yeah, I think so. I
Did a
think we're
good
talking
job.
about the same guy. Hmm?
He did a good job with me.
Yeah, he did a
Well, he
good job with my
continued. He's
parents too.
still he's
Yeah.
still my broker.
Yeah, he actually did a wonderful job with my parents too.
Oh, good.
So I wanted to just take a step back because I know we're talking about these state minimums and what that really means. I wanted to just kind of explain what that is so that we
Yes.
don't keep talking about it and people are like, well, what does that mean? What did it up? So as it relates to the car insurance, every policy is going to have at the beginning of the policy, it's going to have its declarations page, and that's going to outline, or we call it the deck page for short. That's going to outline all of the elements of the insurance, right? What are you actually protect, or what are the actual limits of your policy? So there's three main numbers in there, and they're usually separated by like a hyphen or a dash. What is that? A slash. There's a slash. So the first two numbers are what we call the bodily injury numbers, right? So it's usually going to be either 25,000, 50,000, 100,000, 250,000, depending on the policy that you have. But that first number in there is going to be the amount of bodily injury coverage the policy will provide per person for a person that you injure in an accident. So that first number is the per person number. So if I rear end somebody and I have $100,000 of bodily injury per person coverage, my policy will pay for $100,000 of medical payments or injury payments for that person. The second number is also a bodily injury number, but that is the per occurrence, so the per accident number. So if I rear end someone and I have $100,000 of per person coverage, but I have $300,000 of per occurrence or per accident, my policy will cap out at 300,000. So if I rear end someone and there are four people in the car and each person has $100,000 of injuries, my policy is capping out at 300,000.
Yeah.
So that extra $100,000 is going to have to come from somewhere else. So that's the second line in there is the per accident number. And then that third number is going to be the property damage liability number. So again, if I rear end someone, that third number will show the amount that my policy will cover to, fix the car, or if I just drive into somebody's house, fix the house or whatever, which I've seen, by the way. I mean,
Yeah.
you've seen people drive into buildings all the time on the
Yeah.
news. So each state will have its own limits for what those limits are for each one of those. So, for example, Steph, you're in Louisiana. So in Louisiana, the per person bodily injury coverage is $15,000 per person.
That
That's
won't
it.
get you very far.
And the per occurrence number is $30,000. So if you rear end someone and you've got multiple people in the car, the minimum requirement is $30,000. And then the property damage minimum is $25,000. So, people can get the minimum coverages all they want, but if they're not really looking at that, sure, they're satisfying what they need to satisfy to stay out of trouble legally, but are they really protecting themselves? Are they really
Right.
minimizing their risk exposure?
And I don't know what this looks like in other states, but there there's quite a there I would consider Louisiana a very litigious state as it
Mhm.
relates to personal injury.
Yeah, yeah.
So
I mean,
$30,000 is not going to cover it.
$30,000 is not going to cover it. So, I'm out here in New Mexico, and the minimums here are 25,000 per person and 50,000 per occurrence. Still not a lot. Um, if you're again, if you cause an accident and there's multiple people in the car, $50,000 isn't going to cover a whole lot. And then the property damage minimum in New Mexico is just $10,000. So God forbid you rear in a nice Mercedes or a Porsche or something, or a Tesla.
Right.
You're gonna be coming out 10 grand just for the battery.
I am looking at mine. I think I need to up mine.
Yeah, it's funny, in preparation for this, I was looking at ours as well. And so I'm looking at it, and I hadn't looked at it for a long time. And I'm realizing that our per person coverage is 100,000 and our per occurrence coverage is 300,000, and then our property damage is 50,000. So part of
Yeah.
me is looking at this and thinking we may want to up this at some point.
Yeah, I'm looking at mine and it's 50 and 100. So I need to up this for sure.
Yeah. So quick note to everyone, pull out your declarations pages and take a look and see what your car insurance policies are covering, because
Mhm.
you may be surprised to learn that you may not be covering very much, or
Right.
you may look at it and you may feel pretty good about it.
Yeah, I'm gonna be making a call.
Yeah, I may be making a call too.
This is helpful.
But again, it's one of those things that if we're not looking at it, or if we are trying to avoid looking at it, or
Right.
if we're just kind of customized to doing what's minimally required to do. And I'm not saying that in a negative way, but
Right.
sometimes when there's a requirement, we tend to think that the requirement is what we need,
Exactly.
right?
It's trusting in the system, which so few people trust the government. Why are we trusting that the government will tell us that everything that we have minimally will be what we actually need?
Yeah, but
And
you're
that's
right.
just an interesting observation. So few people trust politicians and the government.
Yeah, but in a way, when we're being told that this is the amount that's required, we are sort of being said, or being told that
Yeah.
this is what you need. And when I look at this list of what the minimum requirements are in each state, I mean, they're all pretty much around the same number, somewhere between 10 to 25,000 per person, somewhere up to 50,000 per accident. There are only a handful of states or a couple states that require more than $50,000 on a per accident basis. Maine has a $100,000 per accident minimum. Maryland has a 60,000. Minnesota has a 60,000. But other than that, pretty much everybody else is capping out at $50,000. So again, kind of encourage folks to go and really take a hard look at that and look at your own finances and see whether or not that coverage is really going to protect you.
And you may not know the answer to this, but I think the other side of it is that a lot of people see paying for insurance that they don't use as a waste of money. I mean, I don't agree with that, but it in a state like Louisiana where insurance costs are extremely high, very, very high compared to other states that I've lived in, it can be a real burden for people to have to make those either monthly payments or biannual payments. And they don't have to use it. So
Hmm.
they feel like, well, I'm putting all this money into it and I'm not using it. But the truth is that you don't want to not have it when you do need to use it. And, the security and the comfort of knowing that you're covered is what you're paying for.
Yeah, absolutely. I mean, but to your point, I hear that all the time, right?
Hmm.
It's you're paying for something you may never have to use. And I hear that not just with car insurance, I hear that with all lines of insurance, right? So some of that is just managing risk. And it goes back to what we were saying before when we were talking about financial planning. Planning for these risks doesn't always mean that you have to buy the insurance for it. It
Hmm.
just means that you have a plan to protect yourself if one of those incidents or one of those threats does occur. And that's true. Well, it's not necessarily true of car insurance unless you just want to carry the minimum. So you could carry the minimum and have a plan to cover the difference of what your policy, doesn't cover. And the same is true with life insurance and long-term care insurance and all those things. You don't have to always carry the insurance to protect it, but you have to weigh out whether or not what your risks are, what your needs are, what your family's income needs are, and whether or not you can cover them on your own. And if
Right.
you can't cover them on your own, then it may make financial sense to transfer that risk to the insurance company for a fraction of what the actual occurrence would cost you. So,
Yeah.
so I'm
I have
looking.
a, oh, go on.
Oh no, I was just going to say, I was looking as we were talking about car accidents and risk. I just pulled up this statistic from Esurance, and it says that your odds of getting involved in a car accident are one crash out of 366 for every 1,000 miles driven. So, I mean, somewhat of a low number because, we drive for years and can maybe never
Right.
have a car accident. But it's when it happens, are you prepared? And sometimes it may have nothing to do with you. You may get hit by someone else and you could be doing everything right. And are you still adequately covered? Does your policy carry uninsured motorist coverage in the event that you get hit by someone who doesn't have insurance or someone who hits you and leaves the scene? I think I mentioned
Mm.
before I got rear-ended by a car that left the scene. Like they hit the car behind me, that car hit me, and then the car that started the accident flipped a U-turn and got out of there.
Oh, wow.
So thankfully, there wasn't any real damage to my car, but my uninsured motorist coverage would have protected me. Now, what's interesting with uninsured motorists is that there are a lot more states that don't require uninsured motorist coverage. And again, if your state's not requiring it, you may be implicitly thinking, "Ah, well, I guess I don't need it."
Right. Must be that everyone in this state's insured.
Yeah, we're all good. And What's a little mind blowing to me is that New Mexico doesn't require uninsured motorist coverage, and we tend to have a fairly high and devastating drunk driving accident history. So the fact that we don't require uninsured motorist coverage is one of those things I hope that our legislature takes up because it happens quite a bit here.
Yeah. Yeah. Same would be true here.
hmm Let's see. Does Louisiana cover it?
I
Nope.
don't,
No
I don't,
requirement for uninsured
yeah.
motorists.
Yeah. I said, I don't think that that's the case.
Yeah.
Well, let, let's talk about homeowners a little bit too,
hmm
because I think people are a little more familiar or whatever. Was that the liability that you were going to talk about? Because I think people are fairly used to talking about or a little more familiar with car insurance. But I don't know much about my homeowner's policy. I can assure
Well,
you that my broker knows, but
yeah.
I trust him, but I don't know
Yeah.
much.
You know, before I jump over to the homeowners, the car insurance is kind of a tricky one because we think we know a lot about it because we all have to have it, but it goes back to what we were saying. A lot of times we just get what's
Yeah, the
required.
minimum.
And
Hmm.
so I don't know if folks really know what those declaration numbers mean or the
Right.
three numbers on the policy or what uninsured motorist coverage really means or all those things. So um it's important for folks to find their declarations pages and go to their broker or their agent and just ask the agent to explain what those numbers mean and ask the agent, am I really protected or do I just have minimum coverage? Now, I would say though that most agents will have had a conversation with folks about getting coverage over and above the minimum, but it's really important for people out there to go find those declarations pages and just have a conversation with their insurance agent to make sure that they're adequately covered. And it doesn't hurt either just to do it just as a general review because your life situation changes, right? Presumably your risk grows, right? Maybe your home has appreciated in value. Maybe your retirement accounts have appreciated. Maybe your investment accounts have appreciated. Maybe you're paying for kids in school and some financial liability will take away from the other things that you're trying to do. So it's really important for people to make sure that they're protected as much as they can be. Now,
Absolutely.
I just had a conversation about my homeowner's insurance
I know.
because we're working through the coverages on our new home right now. So, where do we want to start with the home? I mean, pretty much with your homeowner's insurance, you're looking at a couple things. You're looking at what they consider to be the dwelling, right? The actual physical home. And typically, that's going to be the coverage that's going to help you either repair or rebuild your home's the structure of the house if it's been damaged or destroyed in what they call a covered loss, right? So
Mhm.
things that aren't just so you know, things that aren't covered are going to be like regular wear and tear. Like there's an understanding that things start to wear down after years of being used, right? So like your roof, for example,
I
you
was
know,
going to say the roof
I
would be a perfect example because only if it's damaged in some kind of a hailstorm or wind event will it be covered.
right, right. So that normal wear and tear inside of to your home is generally not going to be covered. And then there's other things that aren't covered, like construction defects, uh, and pet and animal damage. Hey, not covered.
Oh, I know that.
Things like mold and fungus or intentional losses, right? So if it's proven that you did something intentionally to the house, that's not going to be covered. But typically your dwelling is covered and also your personal property is going to be covered. So I used to work with someone and she would always say, if you took your house and you picked it up and you shook it and everything that fell out of your house when you shook it upside down, that's what's considered covered under your personal property. So you've got your home, the dwelling, you've got your personal property, and you've got other structures, right? So other structures are going to be things that are detached from your house. So if you have like a detached shed or a detached garage, or a fence, or if you have a barn or a gazebo, those kinds of things, your other structures coverage will cover those unattached things. So those are the big ones. And then, of course, you have loss of use and liability as elements inside of that homeowner's policy. So if someone comes in your house and they slip and fall, you're having a party, and all of a sudden, somebody comes and they slip and fall inside your house, your personal liability coverage is going to protect you from a lawsuit, or at least, limit how much you have to pay out of pocket, if anything, if someone does have some sort of personal liability at your house.
That makes
Somebody
sense.
somebody comes and falls in your house and they're like, my neck, my back, my neck and my back.
Why did you leave
Shout out
water
to
on your
Friday.
floor?
What?
No, why did you leave water on your floor?
Right, exactly. Um, but what's interesting, like with the dwelling coverage, and I found this interesting, was that the and at first I didn't get it because they were like, well, my dwelling coverage was like $100,000 less than what we were actually paying for the house. And, part of that was we're paying for the land and paying for the placement of the house inside of the community, right?
I
So there are
gotcha.
certain premiums for where you're being placed, but that actually doesn't have anything to do with the cost of the structure that you're living in. And so our dwelling coverage is really focusing on the cost to either replace or rebuild our home.
Yeah. One of the things that we know really well here is that flooding is not covered
Yeah.
for all of that. And we know that in Louisiana all too well because we have to get flood insurance. But there was some story, I think it was written about in the newspaper or something after Katrina, where a family, flood insurance gives you only a certain amount of money, has a limit.
Hmm.
I think at the time it was 250. I'm not sure if that's correct, but the house either didn't have flood insurance or wasn't going to cover what they needed to fix the house. And then their roof fell in, and they were so excited because their homeowner's insurance would then cover it.
Right. Yeah, I mean it's important for people to get an understanding of what their policy is actually going to cover. And the policies are typically pretty clear on what's covered and what's not covered. And so it's important to get a real understanding of that so that if you do have a loss, that you are not surprised that your policy doesn't cover something.
Right.
And also get an understanding if it is a covered loss inside your policy, you also need to get an understanding of how the insurance policy will cover it, meaning some policies, particularly for homeowners and personal property, they will either cover what's called the replacement cost value, or they'll cover the actual cash value. So the replacement cost value that's the amount that they're going to cover to replace the damaged item or the covered loss at the time of the claim without factoring in depreciation. So they're just going to replace what it would cost to replace it at current values. The actual cash value will consider depreciation, which means that you would get paid out less, right? So most or some, I should say, some insurance companies will automatically include the replacement costs, particularly for the dwelling and the personal property coverage, while other companies will require it or to be added as an endorsement, so as a rider. So they will either do replacement costs automatically, or if you want replacement costs, you have to pay extra as like an endorsement or a rider. And so I'm actually looking at my policy here, and it looks like they do replacement costs for the dwelling. They actually do a 20% extended replacement, which means that they would cover 20% over and above the what's covered.
Well, let me ask you this. So let's say you had to get your roof replaced because there was wind damage and then there was water in the house because of that, and you had to replace your floors. Do they like if you want, what if you want like expensive floors to be replaced like what if you want wood floors rather than vinyl?
Hmm.
What is the replacement cost? Where does that number come from?
That's going to be based on what you have currently. So if you
Okay,
have vinyl floors, they're going to look and they're going to say,
gotcha.
what does it cost to replace the vinyl floors that you have? They're not going to be
Gotcha.
like, they're not going to be like, oh, you got these vinyl floors, but do you want these nice hardwood floors? Yeah, it's not really intended to be like a come up, like, but it's gonna replace what you had.
I
Uh,
do have wood floors. I was just curious. That's interesting. Okay. And so there's just a standard number for the square footage that they have that
yeah.
they,
So, but also when you're actually going through the process of purchasing your policy, the agent will ask you all kinds of questions. You know, what
yes.
type of floors do you have in the house?
Well, they
Describe
do
your
an
roof.
inspection.
They will in most cases do an inspection of the exterior of the house. I'm not sure how much interior inspection they
Oh,
do
yeah,
when
they've done
issuing
a
the
big one.
policy. Hmm?
Yeah, he came in and didn't, I mean, it wasn't as thorough as the purchase inspection that I paid for this
Yeah,
house,
for the insurance
but
you're
it
talking
was,
about.
I mean, he went up in the attic, he did all of it.
Oh wow, yeah.
These inspectors take their jobs very seriously, Chad.
So are you? Was this for the actual homeowners insurance?
Mhm.
Oh wow.
Yeah, it was
Yeah.
two separate inspections. And I was grateful that it wasn't as thorough as because I live in an older home.
Hmm.
And so he didn't do the level of inspection, but he did come into the house and he took pictures of all sorts of stuff. Although I had to send pictures to my agent of the exterior. And then when I got a new roof, I had to send more pictures.
Yeah, that's interesting. I know that the agents that we've worked with, they go and they take exterior pictures, but they didn't go in and do interior. That's interesting. I wonder if that's a a company by company thing or a state by state
Maybe.
thing. It'd be interesting to find
Yeah, I
out.
don't know. Well, and I'll find
Yeah.
out if it's a state thing when I
Hmm.
buy my next house.
Yeah. Yeah, you will find out. But no, that's really interesting. But yeah, so they'll ask questions about the type of floors that you have. You know, do you have an alarm in the house? Do you they'll ask about the windows, the roof, obviously the square footage and everything else. Do you have pets? So a lot of those questions they will ask to make sure that they have as much info as they need about the house so that when it does come time to potentially replace something, they know exactly what they're replacing and what the replacement cost would be for something like that. Or
Yeah,
if you're
and
doing actual value, what the cost would be with depreciation.
I think the pets add to your liability as well.
Yeah. Well, right now we just have a bunny. So,
Well, I think my dogs added to my liability because
yeah.
they did ask me, like, has your dog ever bitten anyone and things like that.
Hmm. Well, we have a bunny who lives in a little cage, and right now she is chewing on the exterior of the cage. It's like a wooden cage that she lives in, and she just chews on the wood. I don't know if it feels good to her or what, but when we move into this new house, we're gonna have the conversation about this bunny because if this bunny chews on any of this brand new house, I might have an issue.
Yeah, I get that. I get that. Brand new home.
Right.
Yeah, it's interesting to think about and kind of going back to Katrina again. There's a funny story that I heard, and this I wasn't me, but it was a wealthier person talking to a teacher at one of the schools where I worked, and the teacher had lost their home to Katrina, and the parent who was wealthier than the teacher had also lost their home. And that parent said to the teacher, "Well, my house was worth so much more than yours, so we lost a lot more." And I think about that often. I think that it's so funny now. Yes, maybe they did lose more financially,
Hmm.
but both people lost their homes.
Sure. Both people lost their home, the memories associated with the home, and all those
Mhm.
emotional things that we talked about in the last couple weeks, and what a home really means to you, right?
Yeah, yeah.
But let's take that's actually a nice let's take that wealthier person and let's say that her home was worth, a couple, million, couple million bucks, whatever that number is. And going back to the homeowner's policy, and particularly the personal liability element of the homeowner's policy that covers if someone were to have an injury at her house, right? So let's say, we're at her house and someone slips and falls, and all of a sudden now, we've got these injuries and we go to the hospital, and our hospital bill is $500,000 because we had a pretty massive fall and had surgeries and all these different things. Her personal liability coverage hopefully would cover all of that. But if it doesn't, she would either have to pay for the difference out of pocket, whatever
Mhm.
that is. And, I'm looking at my policy right now, or the estimated policy. Our personal liability coverage is listed right now at $300,000. So
Mhm.
that should be enough for most things, right?
Right.
But in the rare instance it's not, we would have to come out of pocket for the difference. Or one of the types of insurance that we hadn't talked about yet is to have an umbrella policy.
Mhm.
And an umbrella policy is really there to help provide that extended protection, that extra protection that goes beyond the limits of the homeowner's insurance policy or the car insurance policy. And it can help to provide that type of coverage, for injuries, could provide that extra coverage for property damage, or lawsuits, and those other general personal liability situations. And the reason I bring that up for that wealthier person is she is likely also potentially a target for people
Yeah.
that see an opportunity to sue. Right? They're like, oh, let me
Yeah, and
get
she's
on this
probably
property.
pissed a lot of people off because she
Yeah.
doesn't
Well,
really have a lot of
yeah,
social skills.
yeah. Not even accounting for her attitude. Just, going by and seeing the house and saying, someone goes by and they're like, oh, this person looks like they have a lot of money.
Hmm.
And this may be an opportunity to slip and fall and sue. It's not like that's a recent occurrence that happens a lot, but umbrella coverage can provide that additional protection to make sure that you're protected over and above the limits of those policies. And when we were going through our homeowners insurance quotes, I asked the agent about umbrella coverage just to get an idea of what that would cost. And it's reasonably priced. I asked him, what $1 million of umbrella coverage would be. So $1 million over and above, just to make sure that if we rear end someone, if someone slips and falls in our house, what that would cost. And it was roughly about $500 for the year.
Okay, that's not too
Um,
bad.
so wasn't too bad. So we're gonna go ahead and add that coverage on there as well, just to make sure that we're protected in the off chance that someone has an injury at our house.
Wait, and what's the name? So a kind of umbrella insurance type of thing. I can't remember the name of it, but when you buy a new car and you get that insurance, gap insurance.
Gap insurance. Don't ask me about gap insurance. I don't know.
Okay. Well, I got gap insurance when I bought my car.
Uh-huh.
Later, it was totaled by being hit from behind.
Uh-huh.
And the gap insurance covered the cost of the car before when I bought a new one.
Well, good.
Because the insurance payout did not cover the full cost
Hmm.
of the car when it was totaled.
Yeah. So the gap insurance pays off the car loan if your car is totaled.
Yes, thank you. That's better the way you said it. Yes, they paid off my car loan
Hmm.
and then when I had to get a new car.
I'm
So
a
that
very
was
good reader.
yes, you are.
Thank you. It's the benefit of having four monitors when we're
And that's an inside joke because I said that to Chad once and then proceeded to flub everything I was reading.
so gap insurance helps pay off your car loan if your
Yes.
car is totaled or stolen and you owe more than the car's depreciated value.
Yeah, and apparently it had depreciated pretty significantly in the 3 months between when
Hmm.
I purchased. I mean, that's just the nature of a car. But is that what considered a form of umbrella insurance? I know umbrella insurance sounds like it's really just like to cover your
Hmm.
liabilities in general.
Yeah. So yes, the gap insurance is really there to pay off your car. The umbrella insurance is really there to pay for something that happens to someone else
Gotcha.
in the
Okay.
event that they are hurt and you're the reason that they got hurt.
As you can tell, I don't have it.
The umbrella?
If you might be judging from my questions that I don't have umbrella insurance,
Yeah.
but
But
I might now.
you're not alone. A lot of people don't have it.
Right.
And again, that's one of those things that a lot of folks don't have it because it may not be something that was explained to them. Or,
Right.
I mean, some of this is managing risk, right? In some cases, people may not necessarily see it as something that's beneficial. And it goes back in part to what I was saying about the about that wealthier person who is seen as a target and may need that additional coverage to make sure that she's protected in the event that someone does try to go after their net worth, right?
Yeah.
So it's certainly something that everyone should discuss,
Hmm.
but it's also one of those things that after you do an assessment of your risks and your net worth, and you decide whether or not you need it.
Right. That makes sense.
So,
Very informative as usual.
well, this has been pretty interesting. I didn't think I would have this much fun talking about homeowners insurance and car
Trust me,
insurance and
I
umbrella
didn't think
insurance.
that I would either. I can assure you, it's a little more fun for you because you know this stuff, but
So, well,
it is
what is interesting is that this part of it is not fun for me at all. I am licensed
yeah,
with for property and casualty, but I don't, it is not part of my day-to-day business. I usually refer this part out to folks. But fun fact, I don't think you know this little fun fact. I taught a course at the University of New Mexico at the business school on risk management, and the course centered around homeowners insurance and car insurance and
look
all of
at
those property
you.
and casualty lines of insurance, health insurance. Um, I did that about back in around 2010 or maybe before that, 2008. It's probably been 15, 16 years ago. I taught this course and I did it
Wow.
for 2 semesters. And it was one of those classes where I was regularly just one chapter ahead of the class in the book.
I've I've been there. I have been there. Whenever I
But
was assigned a new course, I'd be like, "Oh no."
yeah, but at some point in my career, I did hire an assistant and try to make home and auto insurance part of my practice, and
Mhm.
it just wasn't for me. I just didn't enjoy it. But um, but there are folks that that's all they do is home and auto
Yeah.
insurance. And as an insurance agent, it can make for a great career. But the thing I really just like the financial planning side of things and just kind of digging into people's longer term goals and situations and focusing more on the planning side of things. And that was really where I got excited, like retirement planning and investment management and sending kids to college and all those elements of it. And then, having an understanding of the risks associated with the home and auto piece, and then referring those to agents that I like to work with and trust.
And I use the term broker but that's probably wrong.
It's in some cases they're interchangeable.
Okay.
Generally, an agent is someone who works for a specific company, like you work for State Farm or Farmers, or so
Okay.
you're an agent, you work for that company. A broker is someone who they don't represent a single one company, they represent multiple companies, but they're doing the
Oh,
same job.
he is a broker then.
Yeah. So,
He works for a company, but they work with multiple
right,
insurance.
right.
Okay.
Yeah. Yep. Yeah. When I worked for the one large insurance company I used to work for, I was considered an agent. Now that I'm independent, I'm considered a broker.
That makes sense. Okay, I
So,
appreciate you with that. Well, I think we've done a good job of exploring this from the mental health side and from the financial risk side. So I appreciate all the information.
I hope so. Well, I appreciate the information on the mental health side. This was really helpful. I think in a lot of cases for me and the people in my life, and it was useful. And I keep going back to this, but just this idea of understanding what your initial reactions are, I think is helpful, because if we're more aware of that, I mean, a lot of this is about awareness, right? But if we're more aware of how we react to things, that's how we can start making changes if needed.
Absolutely. And I was
So,
just thinking, like, maybe I wonder what I can do this week. I think I might just be more mindful myself and sit with that one a little bit, and I can report back next week on how that goes. Because I try to do that fairly regularly, but
mhm.
there have been a lot of additional stressors that have been added to my life and your life too when it comes to moving and all of those new job, those sorts of things. So I think I'm gonna do that for myself this week, and I'll let you know how it goes.
Yeah, I think I'll do the same.
Okay, sounds like a good
And so
plan.
we'll have to report next week. So, all right. Well, again, we want to thank everybody for listening. Please make sure to be mindful of your wallet and your mental health. And we will be back next week with more exciting topics.
Thanks, y'all. Can't wait to see you again next week. Or